In a stunning escalation, Japan has just delivered a crushing financial blow to the United States, slapping 150% tariffs on select U.S. banking and financial services in direct response to threats issued by former President Donald Trump. The move caught Wall Street completely off guard, triggering market panic and fears of a broader financial retaliation. This isn't just about trade, it's about respect, sovereignty, and power. For decades, Japan stood as one of America's most loyal economic allies, but not anymore. This bold strike signals the beginning of a new phase in global finance, where allies push back and American dominance is no longer guaranteed. The question now is, did Trump just provoke a financial war the U.S. wasn't ready for? Just days after Trump publicly threatened to impose steep tariffs on Japanese automakers and tech companies, Tokyo retaliated with a move no one expected, targeting the financial heart of America. In a surprise announcement, Japan's Ministry of Finance confirmed a 150% tariff on U.S.-based financial services, including banking consultations, digital payment platforms, and investment advisory firms operating within Japan. The impact was instant. Major U.S. banking giants like JP Chase, Goldman Sachs, and Citigroup, all with operations in Tokyo, were hit with sharp regulatory restrictions and pricing penalties. Japanese clients began pulling assets, contracts were frozen, and access to domestic capital markets became tangled in red tape overnight. This wasn't just symbolic, it was surgical. By striking at the U.S. financial services sector, Japan attacked one of America's most powerful global exports. Its influence over money. Insiders say the tariffs are designed to force Washington to back off, to show that Japan will no longer tolerate threats masked as policy. And while the dollar still reigns globally, Japan just proved that even longtime allies can become challengers when provoked. This wasn't just retaliation. It was a calculated financial counterstrike. To understand Japan's shocking move, we have to rewind the clock. In early 2025, Donald Trump, freshly re-elected and emboldened, reignited his America First trade crusade. His first target? Japan, accusing Tokyo of manipulating currency rates and flooding U.S. markets with cars and electronics. Trump threatened massive tariffs on Japanese goods, even hinting at restricting U.S. military support unless Japan paid more. The remarks triggered immediate backlash in Tokyo. For decades, Japan had cooperated with U.S. trade policies, often at its own economic cost, to maintain the alliance. But Trump's threats crossed a line. The Japanese government viewed them not just as economic pressure, but as an attack on national dignity and sovereignty. Behind the scenes, Japan's ruling coalition met with central bank officials and major industry leaders. The consensus: respond decisively, but strategically. Instead of countering with tariffs on cars or consumer goods, the obvious target, they chose something more unexpected: American finance. Why? Because the U.S. financial sector is deeply embedded in global systems, and Japan knows where it hurts. The 150% tariff wasn't about revenge. It was about sending a message. Japan is no longer playing defense. The response from the U.S. banking world was immediate and brutal. Within 24 hours of Japan's 150% tariff announcement, shares of major American financial institutions plunged across global markets. JP Chase lost over $12 billion, 0 cents, in market value. Citigroup and Morgan Stanley both issued emergency memos to investors warning of short-term exposure and long-term strategic risk in the Asia-Pacific region. U.S. banks aren't just facing higher taxes, they're facing restricted access to one of the most stable, wealthy markets in the world. Key Japanese clients have already begun shifting to European and domestic financial providers. Investment deals are being delayed or outright canceled. Even fintech companies like PayPal and Stripe are feeling the heat, with service licenses now under review by Japanese regulators. This isn't just a hiccup, it's a deep structural blow. The U.S. financial industry thrives on trust, access, and global reach. Japan just clipped one of its wings. And while banks will adapt, the signal is clear. America's influence in foreign markets is no longer bulletproof. What was once considered unthinkable, a financial firewall from a longtime ally, is now unfolding in real time. Japan's decision to target U.S. financial services wasn't just a counterpunch, it was a calculated show of independence. For years, Tokyo has walked a delicate line between cooperation with the West and its growing economic ties across Asia. But Trump's aggressive rhetoric, suggesting Japan was freeloading off U.S. defense and manipulating trade, forced Tokyo's hand. Instead of escalating tensions through traditional sectors like autos or electronics, Japan went for the pressure point: U.S. finance. The goal was simple: send a strategic warning to Washington without damaging its own consumer economy. By focusing on banking and financial services, Japan struck at a symbol of American power without hurting Japanese households directly. And there's another layer. With regional powers like China, India, and even South Korea pushing for more financial autonomy from the West, Japan may be quietly positioning itself as a leader in an emerging, Asia-first financial order. The tariffs serve not just as retaliation, but as a signal that Japan will no longer be sidelined or bullied. In short, this was more than defense. It was a bold step toward reshaping Japan's global role, from loyal ally to sovereign power. Japan's financial retaliation didn't just shake Wall Street, it sent shockwaves through the global economy. In Europe, banking regulators expressed concern that such a sharp move from a U.S. ally could inspire similar actions from other nations wary of American economic pressure. The London Stock Exchange and Frankfurt's DAX both dipped as investors scrambled to reposition assets away from U.S.-exposed financials. In Asia, the reaction was mixed, but telling. China, India, and South Korea remained officially silent, but regional analysts noted a clear opportunity. If Japan can challenge the U.S. financial presence, others might follow. Several ASEAN countries are reportedly exploring expanded financial ties with Japan, hinting at a quiet pivot in regional power dynamics. Even U.S. allies like Australia and Canada began reviewing their own vulnerabilities. Could Trump's unpredictable trade threats be driving longtime partners to hedge their bets? The IMF and World Bank issued cautious statements, urging measured dialogue, but behind closed doors, the concern is real. Is this the beginning of a fragmentation in the Western-led financial system? As financial institutions worldwide reevaluate their global strategies, one thing is clear: Japan's move has changed the rules, and the ripple effect is only beginning. Japan's 150% tariffs mark more than a policy dispute. They reflect a global turning point. For decades, the U.S. held unrivaled sway over the world's financial architecture, exporting not just dollars but also its rules, institutions, and influence. But today, that dominance is no longer unchallenged. First came China, building alternate payment systems. Then BRICS expanded, creating new trade blocs. And now, even Japan, once the most loyal of U.S. allies, is willing to challenge America's economic authority. This shift signals a deeper reality. The world is rebalancing away from U.S.-centric financial power. The tools America once used to pressure rivals, sanctions, market access, dollar dominance, are being questioned by both foes and friends. Japan's retaliation is proof that Washington's tactics no longer come without consequences. And while the U.S. remains a financial superpower, its grip is slipping, not from direct confrontation, but from fragmentation. As more nations seek sovereignty over their economic systems, they're building alternatives and choosing when to push back. This isn't just a trade disagreement, it's the quiet unraveling of an old order. And Japan's bold strike may be the clearest signal yet. The future of global finance won't be written in just one language anymore. The U.S. has long relied on its financial dominance to shape global policy, but Japan's sudden strike proves that even the closest allies are no longer willing to play by America's rules. A 150% tariff on U.S. banking services wasn't just retaliation. It was a message to Washington. Your leverage is no longer unquestioned. As nations from Asia to South America rethink their economic alliances, the age of blind loyalty is giving way to one of strategic independence. Allies are becoming competitors. Influence is turning into resistance. The real danger for the U.S. isn't the tariffs themselves, it's the precedent. If Japan can push back this hard, who's next? We're witnessing more than a trade conflict. We're witnessing a shift in global power, silent, strategic, and already in motion. And the question now is, will America adapt or be left behind?